to some of the unintended consequences in the moment, the issue with the debt market. But first, I want to ask you about Elon Musk. We saw he came out publicly against Trump's trade advisor, Pete Navarro, said very public insults about him. So clearly, Elon Musk was against the tariffs. Now, you'd have to say that Donald Trump is ultimately against tariffs as well. He was trying to, get the base down to no tariffs on both sides. But do you think Elon Musk's push also Trump donors like Bill Ackman, he said there should be a 90-day pause. Would these sort of figures have influenced the president's thinking?
Well, I think one of the things that's come out of all this is that Trump is not in the pocket of Wall Street. That's how he's caricatured all the time by the left. But of course, for the last fortnight, it's been chaos on Wall Street. It's been chaos for stock investors. I mean, he's smashed their returns. They're still down by 7 or 8%, even though there's been a recent rebound. So I think it's smashed that. There is obviously disagreement amongst his supporters, Elon Musk on the one side, Peter Navarro on the other side. But I think it's healthy that all of these debates are out in the open and that people can see them. I mean, it seems Trump's crosshairs are still very much on China. The trade deficit with China has fallen quite a bit, by the way. It was $420 billion roughly in 2018. It's something like $260 billion now. And the tariffs still remain on China. I think more than 120%, which is highly disruptive, and is probably going to lead to imports into the US from third countries, I would say.
So I want to return to this issue with the debt bonds, because there's been so much focus on market volatility, and yep, it's still down, but the reality is markets do go up and down. They react to news. There are panicked investors. But this issue with the debt bonds is far more serious. Can you tell me about how that could play out for the US with China?
Yeah, certainly the bond markets have been just as volatile as the stock markets, even though they don't get as much attention in the press. I mean, it's interesting in recent days, the US government 10-year bond yields have been even higher than Australia's, I think about 4.5 by 4.3. The concern here is that China is a big holder, relatively large holder of US government debt, and that in a fit of pique or anger, it may decide to sell some of those bonds, which of course would put up their 10-year bond yield. But the reality is, if you look at the actual ownership, I think, and this is my view, China simply doesn't own enough to be a huge problem for the US. It owns about 10% of the outstanding stock of US bonds that are held by foreigners, and 2% of the actual total. So I think it's very unlikely that China will sell, will suddenly try to sell its US government bonds, because of course it itself would make capital losses, very significant capital losses. And it is the most liquid asset in the world. So look, there is a concern that foreigners could dump US government bonds. And of course, the US government is extremely susceptible to that because it has $36 trillion of debt. It's borrowing about $2 trillion every single year. So it is susceptible, but I don't think that China's will press the big red button on that.
Well, another economist I spoke to off-air last night, Warren Hogan, was worried about this and said it could impact on US continuing to meet its debt repayments. But anyway, I guess we'll see how that plays out with China.
It could. Who knows? No one knows what's happening. No one knows what's happening.
Adam Creighton, love having you on as always. Thanks for your time.